What did the Fed do when they just bought up trillions of bonds during COVID? They told Congress that they can spend as much as they want and get away with it.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. Any references to performance of securities are thought to be materially accurate and actual performance may differ. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional.
And we are back. Thank you for joining us for yet another of our interviews. This is the part of the show and it's part of doing this that I like the most. I mean, I like talking to the folks every day with Chase and going over markets, but it's the interviews that I look forward to. And this one has been long overdue. And this was one of the first guys that I ran into on social media. And I didn't think that I would have the good luck to be able to run into one of the fathers of modern central banking, Mr. Rudy Havenstein himself. Rudy, I love your takes, but I am more impressed by your longevity, man. You've been in the central banking game for now, what, about 140 years?
I'm hard to kill in a variety of ways. Yeah, they tried banning me a bunch of times. Even once under Elon, I was permanently suspended. But that fortunately, I must have friends in high places or something. Or actually, it was kind of cool. There was 4 times I was permanently suspended between like a week and between. So several times were like several months, and just the vitriol from my followers towards Jack or towards Elon when I was suspended was very gratifying to see. So it was nice. It was kind of annoying to be blocked, but
my personal favorite is when you catch the ire of CNBC anchors and they go after you.
Oh, they don't go after me. They block me.
Yeah, right. They just block you. Yeah,
they've all blocked me by now. Yeah, Carl Quintanilla followed me for like 10 years, and then one day him and Santoli just decided to block me. And so the funny thing is someone actually asked Carl, why did you block Rudy? And he says, I don't remember, but I'm sure it was a good reason. Actually, which I love. I mean, I'm not offended. I know I'm not for everybody. I encourage people to block me, but yeah, those guys, I mean, it's just been the kleptocracy infomercial. It's gotten so much worse. I mean, we used to have it on in the office in the 90s, just as kind of background white noise, which is what it is now. People go, how can you watch that? It's like, I'm not watching it. It's like I'm in a Thinkorswim app and I've got this little window off to the side, and most of the time it's muted. But I use it as a gauge of sentiment and froth and idiocy in the markets. And it's been a good one. And it's gotten so much worse. I mean, you used to have like Mark Haynes and people like that back in the day. Hell, they had Dylan Ratigan on during 2008. And he was the only one who really was saying the kind of things that I was saying, like, this is, what are we doing? Everyone else is cheering on the arsonists and, playing fire marshal, the central bankers. So anyway, and here we are today where, you've got Elon Musk, I just read, I think is worth 500 billion. And, you've got half the country that's hand to mouth, I think. And we're spending money on Israel and Ukraine and Qatar, and our infrastructure is like ranked, I don't know, 100 and something in the world. It's crazy to me. I don't know what happened to MAGA, but that was just a PR stunt.
Yeah. I think that what happens is that, unfortunately, I think you're reaching a point where the constituency is almost like permanently disillusioned, where I don't think that the main vein or the main, group or whatever of Trump supporters, I don't think they've changed their opinions and said that, we now accept fiscal profligacy. Right. I think that they're hesitant. I think in some ways we're all doing this as a culture, is like it's NIMBY, not in my backyard. We want fiscal discipline, but not as it relates to our own handouts and our own largesse.
Oh, absolutely. There's a great picture I have that's it's old. It's probably, I don't know, 15, 20 years old. And it's a sign. Someone says, don't take from my Medicare to pay for your socialized medicine. And that was the sign, which I got a kick out of that because, yeah, it's all, we've been a welfare state since the 30s. I mean, to be honest. But so we have a safety net for the very poor, and of course we have a safety net for the very, very, very richest. My definition of the middle class is people who aren't poor or rich enough to get welfare. So and of course that's where I came from, and that's where my loyalties lie. Even though I've been very fortunate in life and done well, but I remember eating a lot of hamburger helper and working constantly. My parents working 2 jobs, my dad, and and as I was telling you before we turned on the camera, I see now it's kind of gratifying after a dozen years on Twitter. I came on to try and say, hey, what are we doing? With these, we can't prioritize the stock market and Larry Fink and Steve Schwartzman. We have to prioritize, the salt of the earth, the middle class, and even the poor people that need a hand up. And we haven't done that. But now I'm seeing more things like I mentioned to you. You'll see some guy with 3 million Twitter followers send out a chart of like, oh, look, what the 0.1% is making, this much, and look at the other 50% has this much. And I'm like, well, that's great. But where were you when I was posting that chart, 10 years ago or more? So as I mentioned, it's kind of gratifying in some ways to see that a lot of the stuff I'm talking about is becoming mainstream knowledge now, common knowledge. But it's like, we could have used some of these guys, back in the day, and so many people I have it all the time not all the time, but I have in the past had people on Twitter literally reply and say, you know what, I know this is a scam or this is a fraud. I don't care. I'm making money. Basically screw the grandkids, which, I'm not, that's the opposite of my philosophy. I think we've been a very profligate generation. And I don't like the whole generational theory thing, but I'm just saying the older people have been getting a good deal and at the expense of the younger people. And I'm rooting for the younger people. So,
well, it's really hard for me to know whether this is one of those dynamics where it has always been this way, or if it's because, I've experienced it and rubbed up against it for the first time. But to me, at least in my lifetime, the cognitive dissonance that exists on so many different levels and in so many different topics today is both terrifying and frustrating and maddening, but also this belief, and we talk about it in the office all the time, that somehow you've got a culture now that believes that there are no cost solutions to things, right? Meaning they don't look at everything as a cost benefit analysis, right? Everything is, well, we've got to pick the costless solution. And you bring it up. I am a fan of having a safety net. I am like you. I'm a champion of the middle class. I think I know that that's our future, right? That's the middle class is what made this country so unique and so vibrant and so special. And I think upward economic mobility is a must to hold a free market capitalistic society together. But this belief and getting back to what you were saying, that I am encouraged that people are waking up, but I'm as equally and maybe even more discouraged by the fact that they had to. Meaning, what does it say about our culture that guys like you and I were ringing the alarm bells saying you cannot print prosperity, and it literally takes them to watch, food prices go through the roof, right? Like they didn't, it's like they couldn't sit back and see, hey, creating all this money could create some serious wealth inequality and some serious inflation down the road. And you're kind of looking at them going, you think? What do you chalk that up to? That at least from my perspective, we are the most unwise, we are the most foolish, and we are the most short-sighted we have ever been, at least from my estimation. Because, I feel like if you went back to the 50s or 60s and you said that, I feel like it'd be a much more common thing where people look at you and go, you can't just print money and print your way into prosperity. You're gonna denigrate the currency, and and then now all of a sudden everybody's, hey, hop on board, right? It's almost like a good thing. Fed's cutting rates, they're printing more money. Let's go celebrate. Like I said, I'm with you. I'm encouraged that people are waking up. I'm also shocked it took us this long.
Right. Well, take the Federal Reserve, which has been my particular target over the years. They have, to my knowledge, they've never acknowledged that they have any influence on wealth inequality at all. They deny it, and they also deny that they have anything to do with inflation. I mean, it's hilarious. I have this video of Neil Kashkari being interviewed on 60 Minutes, where you've probably seen it, where he Scott Pelley's going, now, is there any limit to the amount of money that you can print? And Kashkar's going, there is no limit to the amount of money we can print. We're just going to print. This was like in 2020, and yet, and for 10 years, you had every single Fed official every day, because I would highlight these idiots, and we have no inflation. We need, Yellen's only regret, this is an exact quote, her only regret at the Federal Reserve Chair is low inflation. Powell said low inflation is the biggest problem of our era. You got John Williams and Lael Brainerd calling for higher inflation. Every single Fed member was calling for high inflation, ever since 2008. And you know what? They got it, but they have no responsibility for it. That wasn't us. We had nothing to do with it. Now, people will say, I think that's huge. I think they're in a bubble. There's 25,000 or something Fed employees. I don't think they don't talk to you and me, and they certainly don't talk to, some middle-class mom in a supermarket. Another running joke I have is, CNBC has bumped this, family off their panel discussion on inflation, because who comes on to talk about inflation? Well, let's get David Zervos on to talk about inflation or something. It's just, you can understand where my, vitriol and, satire comes from. It's so easy. Let's bring on Larry Summers to talk about the middle class. I think they're in a bubble, and they're making a ton of money. Just look at who Trump has surrounded him with, all these techno, billionaires. And I don't think that, who does Trump talk to that's not a gazillionaire now? I don't know. I think it's too bad, because I think a lot of people thought, he was going to be like About America First, and he talks a good game, but once he's in charge, oh my God, every day, what's his top issue? Well, Qatar, don't attack Qatar, or it's an attack on the United States. And I'm like, dude, what are you doing? Seriously. And I think a lot of Americans feel that way. They I think some people had hope for Trump the second time. I didn't, but I'm always hopeful, but they have to feel very let down right now. And I know a big part of it is another issue is that whole Epstein thing, where it goes from, we're going to arrest people and we're going to turn over the files to, hey, it's a hoax. So it's just a stupid hoax. And if you believe it, you're stupid. That it's like the middle class and the voters are getting slapped in the face repeatedly. And this dates back to 2008, when I think at the time it was reported that the calls to the congressman were 300-1 against TARP, right? Mm-hmm. And it failed on the first vote. And they added like 400 pages of pork, and then they passed it. So even though constituents were 300-1 against, it didn't matter. And look at our Congress now. I don't feel like our government is being run in the best interest of Americans. It's being run in the best interest of a very small group of Americans. And I don't think that's good. I don't think I was telling people 20 years ago, you don't want to have a Honduran level of wealth disparity in the United States. And I think that's all we've done since then is create situations that create that situation. It's policies that create wealth inequality. And I'm not a socialist or anything like that. I'm quite conservative, I feel, but I just hate to see it, because this is not good for the country to have Elon Musk worth worth more than half, the other 50% of the population. It's just not good, That's the kind of thing. Louis Gave's got a great quote. He says he grew up in France, and he learned a lot of Marx. And he said the one thing Marx teaches you is that revolutions are usually the result of inflation. So, be careful. These people, they're taking us down a path that's not good. We got to care about America first. And I haven't seen that. And I was hoping we'd see it. It's nice that the borders are closed, but let's bring in 600,000 Chinese students. It's kind of like, just when, it's like, look over here, and then you get whacked in the head with a 2x4 over there, I don't know. It's discouraging. I think maybe for some of these guys and the intelligence type guys, maybe that's the goal, just to keep the population discouraged, because and divided, because they want us to be attacking each other instead of saying, hey, wait a minute, what's this deal Trump just cut with Pfizer? Can you imagine being a Trump voter, which I was not, but and then seeing him do the Pfizer deal? I mean, what the hell is going on there? And praising, the Pfizer CEO. And I mean, it's insane. And before people, have hate mail, I'm not sorry Kamala lost. I'm one of these weird independent guys who doesn't like the Republicans or the Democrats. Anyway, I just, man, just keep rambling.
Yeah.
But I hear you.
No, and I feel very similar to you. Now I did vote for him. And
yeah, a lot of my friends did.
Yeah. And I'll be fully honest with you. If we had the election today, I would again.
Right.
Both times I voted for him, he was not my perfect candidate.
No one
but
ever is.
No. But I also went into it clear-eyed. You know what I mean? Like
Sure.
I'm not disillusioned by it, by the things that he's done that I'm not a fan of.
Yeah. I think a lot of people are, though.
Yeah. I get it. I get it. But what I think that I've spent a lot of time thinking about this, and I think that one of the biggest issues we have is that we are dealing with two political parties, where the construct, the ethos behind the party, the construct of the party, the thought, the common philosophies that the party members share. I just think the parties have outlived their usefulness altogether. Mm-hmm. I think that they are fighting wars of 50 years ago, and I kind of feel like economically, in terms of societal impact, a lot of the programs these guys roll out and a lot of the answers they have are kind of the modern day equivalent of taking horse buggies into war against tanks, right? Like it's just we're fighting with tools of bygone eras, and neither party is equipped. And I look at this and I'm constantly reminded, and the timing's right if you're into fourth turnings and things like that. But I think that's one of the biggest issues we have, is that we've got these two parties to pick from, and neither of them has the solution. And the problem, I think, that one of the reasons they don't have a solution is I think they've both been co-opted by the wealthy. So what appears to be a two-party system is mostly a one-party system. Mm-hmm. And like you said, you've got the technocrats and the billionaires that are the only ones that always win. And then pivoting it back to what you said about the Fed, and I think this is a perfect example of this. The low inflation for years, and you and I had conversations about this, but the low inflation for years was because you were giving all of this largesse to people who were already rich. So that means if they add another zero on their net worth, their propensity to consume does not also rise.
Right. And they don't measure asset prices either in their inflation.
Right. Right. So the main measure of wealth in our society today, unlike 50 years ago, right? 50 years ago, nobody wanted to know what was in your 401k account. That wasn't a test of wealth, right? Even if you had a 401k account. But the way that now we all measure wealth, predominantly through public equities and financial assets, we don't look at that as a metric of inflation. It just doesn't make any sense.
Right.
Bloomberg
has a billionaire meter. You can keep track of the top billionaires. I think it's live. They keep it updated. It's billionaire worship, this in this society. It's crazy.
Yeah. And when I sat there and listened to, who was it? Who you probably know. Was it Bernanke that they were interviewing? It was some point in the last 2 years where, to his credit, he admitted it. But it was also one of those admissions where you wanted to pound your head against a wall, because you're like, hey, thank you for being honest, because I don't really feel like you have been most of the time.
If it was someone being honest, it wasn't Bernanke. I'll tell you that.
Okay.
What did the guy say? What did he say?
Maybe it was Powell. One of them stood up and said that they were surprised at how things worked post GFC, that they really believed the wealth effect would trickle down. Right. And it didn't. And I'm sitting there listening to him talk. And like I said, it was kind of being torn in two, because you're going, well, thank you for at least admitting that you guys didn't know what you were doing, but also, shame on you. Right. Because in the process of not understanding, how did you not understand that? I mean, to not understand what would happen in the wake of 0809 is to show how disconnected you are from reality, and how disconnected you are from the way that the street and investments really work, right? Meaning, if you give these guys the ability to effectively manufacture profits, borrowing at zero, lending out at a higher rate, or being able to borrow at effectively zero and turn around and buy, city blocks full of houses. If you let these guys do this, and this is the way that you address these issues, how does it end up in any other way other than creating a massive wealth disparity?
Well, what happened after the failure of the Fed in 2008? I mean, people think that Bernanke was some sort of hero, but basically he was a failed regulator, and nobody recognized that. So what did we do? We made the Federal Reserve infinitely more influential and powerful in our society ever since, 08, 09. And then in 2020, they were given almost dictatorial powers. They can make decisions and they can create money with no limit, without minutes available to the American people. They don't, no 5-year delay, no nothing. I mean, that was specifically passed in COVID to let them bail out their hedge funds and billionaires and their banks that own the regional Fed branches without the public ever really knowing about it. Because I think they know the public, if they knew about it, would be outraged. I mean, I joked before, just give me like a half hour prime time on, Netflix and on CBS and stuff, and I'll just go over my greatest hits of explaining why the Fed is bad. And I think you'd have, hopefully you'd have people all riled up, because I think a lot of people know that something is very wrong, but they don't understand the Federal Reserve's role in it. And of course, the ultimate problem is Congress, which created the Fed. But Kevin Warsh has a great statement on it where he says, what did the Fed do when they just bought up trillions of bonds during COVID? They told Congress that they can spend as much as they want and get away with it. I mean, I'm paraphrasing there, but that's the exact quote. And I mean, that's his sentiment. And that's a fact. I mean, the Fed, they're talking about yield curve control. And I look at the Fed balance sheet and it's like it's 6.6 trillion or something even still. And I say, well, it looks like we already have 6 trillion of yield curve control. They're buying. I know they're running off their MBS supposedly, and they're they appear to be. And then their QT of treasuries is almost completely stopped. I mean, it's not going anywhere. It's like $19 billion since April. I looked the other day. So that's a joke. They're buying bonds every day, including today. I always retweet an account called Financial Juice that, Fed bids on $5 billion for, 5-year notes. What they're doing is they're just say they have 20 billion running off that week, they'll buy 10 billion back, or so. I mean, so they're still doing, they're still trying to keep the plates spinning in the air. We need to recognize, people say, well, why do you pick on the Fed? I mean, it's like, I think everybody knows about Congress. And when I started in 2013 on Twitter, most people weren't aware of the incredibly powerful role that the Fed plays in all the things that have gone wrong in America in the last, 20 years at least, or maybe since 1913. So I try to highlight that. And I have, countless posts and with links and with data and with, quotes. And I back my stuff up, which is why the CNBC guys never came after me. They never do, because I'll take them out to the cleaners, and same thing there were some prominent FinTwit guys years ago when I had 100 followers, who'd come after me and make fun of me or something. Oh, look at this idiot. I started fighting back, and then they don't bother me anymore. And then I think eventually we just block around COVID when they blocked Zero Hedge, when they banned Zero Hedge. I was so pissed at that I just blocked some of these idiots that had been very prominent people, 10 times the followers I have. I just said, what, life's too short. There's so many good people out there I can hopefully entertain and reach, that I'll deal with them. But we need to recognize the Fed's role. And I think most of Congress, Chris Whalen has a great line where he says he doesn't think, he thinks that he can count on one hand the number of members of Congress who can discuss financial matters with any intelligence and understand the Fed at all. So I think I have joked, that the Fed, the Congress doesn't. No one in Congress knows that they created the Fed, and they can put the Fed on a leash anytime they want. And they think it's some sort of coven of witches that lives in the sky and come down with from the mountain with stone tablets with monetary policy. It's insane, but they love it. The Fed is Congress's drug dealer. And, some people are like, well, now Trump's trying to rein in the Fed. Isn't that great? And, well, it's good and bad. I mean, and the Fed needs to be reined in. Matthew Stoller is one of the best, if you want to get into the executive branch control of the Fed, or actually congressional control of the Fed would be constitutional. But anyway, you can check out Matt Stoller's writings on that. He's a good guy. But it's just Trump wants, people say, yeah, Trump's going after Powell. Well, Trump's going after Powell because Trump wants negative rates and more QE,
Yeah, right. More largesse. Yeah.
So it's like, yeah, hey, we're going to arrest Ted Bundy, but who's arresting him? John Wayne Gacy or something. It's like, it's very silly, that Trump is as bad on monetary policy as anybody, if not worse. At least Powell, I think they're very political and they're not independent, and that's pretty clear by now. But 5%, what are we at? 4%? That's normal. That's below normal. Fed funds
way
rate.
Below. Yeah.
Way below. People say the reason people can't buy houses is because of high mortgage rates. And I'm like, well, actually mortgage rates are historically below average. And, maybe the Fed shouldn't have bought almost $3 trillion of MBS during COVID, or since 2008, but they bought half since 2008. And then in 2020, they went insane. So Powell went insane. Remember, Trump's a real estate developer. He loves debt more than anybody. Powell's a private equity guy. They live off cheap debt. Look what's going on now that it's the cheap debt is kind of unwinding. I'm sure he gets a lot of heat when he goes to his private clubs and meets his billionaire buddies. It's just, I could go on and on. This is all documented. I'm glad more people are waking up. I think more people understand the Fed scam now, which is good. Now, will anything be done about it? Probably not, because Congress is so corrupt. You got Thomas Massey, years ago you had Ron Paul. You got a couple guys, and of course they're hated more by their own party than by the other party. So I don't know.
They're not just corrupt though, meaning I feel like that would almost be an easier issue to deal with. Right. Mm-hmm. So bear with me.
Sure.
They're dumb. They're dumb. And it used to be our best and brightest to listen to these people. Remember the critique against Musk, and there's part of me that agrees with it. There's part of me that doesn't. I think that Musk evokes strong feelings one way or the other. I used to be sold part and parcel that he's a complete fraudster. Mm-hmm. I have tempered my belief that way because, much to my surprise, look, I think he's made some really outlandish, bombastic statements that he was going to have a very hard time backing up. And I think that those can be questioned. At the same time, the guy attempted to do most of the things that he said. And he, quite honestly, pulled off some things that I didn't think he had any chance of pulling off. Now I went on a tirade there about Musk, and I'm forgetting exactly why I was bringing him into the fold.
Welcome to my world. Yeah.
Yeah. But what the thing that I think that frustrates me the most, like I said, was just the stupidity of these people. Meaning you listen to them talk about an issue, and it's not that you disagree with the conclusion. It's that you understand by listening to them talk that they have absolutely zero grip on what the real issue is. And, one of the things we talk about all the time, you can't fix a problem until you know what the problem is. And I think the real danger is that there's one thing in DC that everybody agrees on, and that is stock market and asset prices up, good. Asset prices, stock market down, bad. Right? And nobody will argue that. And you sit there and go, okay, guys, so when you cross back over into the realm of adulthood, you will realize, by deploying what little wisdom you were supposed to gain by this age, you'll realize that there is no 4 legs good, 2 legs bad solution, right? This is a cost benefit analysis, and you cannot be advocating for the Fed to cut rates or to help out, quote unquote, help out, right? Because it's kind of code words, right? When the right wants the Fed to do something, we want them to cut rates, we want them to increase liquidity, right? Loosen things. When the left wants the Fed to kick in, they want them to help people. Right. But it ends up going the exact same way. And like you've talked, as you watch this, this regimen, if you will, of largesse, of increasing safety nets, of everybody gets this and handing it out and billionaire, you just sit there and go, guys, it's at some point, this will become the problem. At some point, prices being too high is the problem. Listening to these people all opine about why housing prices got too expensive, you just look at them and go, are you out of your mind? You think interest rates are the problem with housing? How about the fact now that the median home price is something like 5.5 to 6x the median salary, right? That's the issue. And that issue, there were other things that played a part, but that issue primarily, I don't see a bigger driver of that issue than the Fed.
I agree. I'm one of the few people that will actually have, when Powell or Yellen or Bernanke would testify in the background, I'd have C-SPAN app and I'd be listening to the congressional questions and listen to the Fed chair's responses. And I think it's one of the only times I've ever felt sorry for a Fed chair was when they are being questioned by Congress people who not only are grandstanding, which they almost all of them do, but they are, as you put it, stupid. I mean, they are asking, questions like, will the Fed allow Guam to tip over? And there's also, I mean, that's an extreme one, but I mean, it's ridiculous, and it's the only time I'm like, oh my God, I actually feel sorry that Powell has to answer that stupid question. But Chairman Powell, what are you going to do about, wind farms in Oklahoma? Or Chairman Powell, what are you going to do about flooding in Bangladesh? And it's like, Congress has abdicated everything, it seems, over the years. Well, we'll have to get the Fed to do it because the Fed has unlimited funds, and they're like I said, they're the Congress's drug dealer.
No, I couldn't agree with you more. And I don't want to interrupt you, but just stop right on there. Because one of the notes that I had written down, and that people have to understand this, is that if you despise Congress, one of the primary reasons you despise them is because of the Fed. The Fed has been the great enabler, right? They have papered over and anesthetized every bad political decision, and more importantly, every can kick down the road. The reason that we have been able to get this calcitrant, this non-moving, this inability to negotiate is because the Fed has anesthetized the pain of inaction, right?
100%.
The Fed has allowed Congress to not do anything.
That's right. That's absolutely right. There's a Richard Fisher clip that I've posted on CNBC probably around 2010. I mean, or 2012. I mean, this was years ago. And he says the Fed was the drug dealer for the market. We gave them, Ritalin and cocaine and he's kind of laughing about it. I'll repost, when I listen to this later, I'll repost on my Twitter feed so people can find some of these tweets I'm talking about. But yeah, he said he himself, Richard Fisher, who was the Dallas Fed president at the time, and then went to work for Barclays. He said the Fed was Congress's drug dealer, or was the drug dealer for the economy. The other thing, going back to overpriced assets in the houses that cost, where I'm at, the average house, probably starter house is probably say 1.2 million. So the rule of thumb used to be like 3 times, 2 incomes. So how many couples around me make 400 grand? Very few. I mean, so people are basically paying 10 or 15 times their household income to get into houses. And with 2% mortgages, God, I wish I had a 2%. That's possible. But with a 6%, not so much. Not because 6% is a high rate, but because 1.2 million is a high price. It's ridiculous. It's absurd. This is for like a 1,200 square foot. I'm in California, so it's insane. It's always insane here. But Jeremy Grantham has a great quote. Overpriced assets are one of the worst things that can happen for young people in society. It's terrible. I mean, when I was a kid, it was like 3 times. Well, when my dad was a kid, or not a kid, when my dad bought a house, in the early 60s, it was 3 times his income, one income. And then when I bought a house, it was like 3 times 2 incomes. And now, like I'm saying, it's probably 10, 15 times, in many cases, But most people don't realize, most people don't make a lot of money. I mean, I think the median wage in the U.S. is in the maybe 50 grand max, in the 40s, median. So half make above, half make below. I mean, you got Steve Schwartzman, maybe he pulls in $2 billion a year. There's a lot of people that are making 25 grand a year. These are W-2 employees, and I don't know, how do you live on 25 grand a year? Certainly not around here. I mean, unless you live, 5 to a house, which I did when I was young. And I know kids that are doing that now. You got to do what you got to do. But inflation is like a cancer on society. It's not good. And a pet peeve is I'll see, here comes Muhammad El-Arian or David Zervos or Paul McCulley or some other person that I just loathe because of their, kleptocracy cheerleading. But they'll come on and go, we have to inflate away the inflation. It's the only way out. We need to raise the inflation target to, I'm like, it's the only choice, or it's the only way out. No, it's not the only way out. You're just deciding to screw, 95% of the population to keep you guys billionaires instead of centimillionaires. And that bugs me. I mean, can you imagine a guy like Barry Sternlicht who actually said, I have quotes for all, I posted all this stuff. Barry Sternlicht says, 4% Fed CPI target wouldn't be no problem. And I'm like, dude, you're worth $4.7 billion. Of course, it's not a problem to you, but it certainly is a problem to, at least half of America that I think's been living hand to mouth for a long time.
Yeah. And I'll push it even further. Meaning, let's say you got a household income of 80 to 90 grand.
Yeah.
Right. Try raising 3 kids on that.
Yeah.
I don't even know how people do it, man.
No.
It's almost impossible. And then, like you said, nothing is worse. Nothing is worse for the financial future of people than high asset prices. Right. And unfortunately, that's a tough lesson to sell these days because the market has done nothing but just go up and seems to continue to. Although I feel it does feel to me, at least, take it for what it's worth, that I think we're really stretched right now, and I think this run, at least in the interim here, is in jeopardy. At least that's my feel. But the rise, like you said, and I think you hit the nail on the head. And what was it, Sternlicht that said that?
Barry.
Yeah.
He's like Starwood guy.
Yeah. 4% inflation would be absolutely devastating. And that's another thing to take a look at. 4% inflation isn't really 4% inflation.
Of course.
Right. And you need to sit there and go 4% inflation with the S&P trading at 32 times earnings. If you factor in stock-based comp, you're probably at 40, maybe 40 plus. You look at record in affordability and housing. All of these things do not come out of 3.5 to 4% inflation. Right. So the underlying rate, and one of the ways I've explained it to my clients is, look, here's how practically speaking, the inflation numbers are garbage. Do you know anything? According to the Fed, prices have risen 30% since COVID. Do you know anything that's only 30% higher? Right. I can't think of one. I don't know if you've been to a McDonald's lately, but
no,
that isn't 30% higher.
That's what I hear. Yeah, I haven't been to McDonald's in a long time, but I hear you. It's funny when I ask people, I did a survey once, not long ago. What do you think the inflation is? Like 2.9, which is the official one, or and then I did like 6.6 or something, which was the M2 growth, and then I did 10%. And of course, the majority, over half, and this is like with 1,000 responses, of course, then my channel, this isn't a scientific poll, but I had a number of people telling me it's more than 10%. I know that my biggest expenses have been gone up 10%. Over 10, are all double digits. All my biggest expenses, health insurance, auto insurance, home insurance. I joked the other day, but I'm not really joking all my jokes are serious, really, at the heart. But I said, put me in charge of the BLS, and I'll fire everyone involved with the CPI and PCE calculations, and I'll just use the Chapwood Index, which is basically the basket of goods methodology, which I think is the only way normal people think about inflation. They think, okay, this is what I bought last year. I buy the same exact thing this year. How much did it go up? Well, that's not how they calculate CPI or PCE. It's just nutty how they do it. But the Chapwood Index, which does this basket of goods approach, and I haven't, I can't swear by it, but it's all double digits. It's all 10, 11, 9, 10, 11, 12%. And they do it by city. Now you could come up with different baskets of good, single guy in New York, a family in California, family in Alabama, that kind of thing. And it would be way more accurate than this nonsense CPI, which, as Grant Williams says, they've adjusted it so many times over the years. Every time has resulted in a lower CPI. So what the purpose is of these adjustments. One of my favorites is from the mid 90s, like for almost the next 25 years, car prices didn't go up at all.
I've used this example 100 times. Yeah.
Because, and there's a chart of it. You can see it, the CPI, and that goes into the CPI. And the reason car prices didn't go up at all is because they get together and they say, well, the car has, they improved the brakes. So the car went up 2,000, but the brakes are worth 3,000. They're just pulling these numbers out of, And so the car actually fell $1,000, even though it went up 2,000. So, that's all fine and good. But when you go to buy a car, you don't care if it can do brain surgery if you can't afford it. You know what I mean? And they actually have another one I've sent around. It's fantastic. They do the hedonic quality adjustments for men's shirts, and they compare cotton and polyester shirts and short sleeve and long sleeve.
You've got to be kidding me.
I swear to God, I'll send it to you. And you can forward it.
We're hedonically adjusting men's shirts.
for men's shirts, 100%. And anybody hearing this, just contact me and I'll send you the tweet I'm talking about. And so they have this formula that looks like something NASA would write on a chalkboard, where they calculate just how much a short sleeve shirt versus a long sleeve shirt is worth, and just how much hedonic quality change is in polyester versus cotton. I mean, these are like cloistered econ majors that are doing all this nonsense. It has no relation to the real world. Absolutely
no. And let me interject here really quick. And I want to let you go again. So I want people to understand at home. Okay, this is a really good reason of why government should always be looked at with a jaundiced eye, and why you should always be looking over your shoulder when any government is telling you they're doing you a favor.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. Any references to performance of securities are thought to be materially accurate, and actual performance may differ.
Okay, hedonic adjustments, for those that don't know, let me give you an idea of a good hedonic adjustment. And I know, and when I say let me give you, I'm not talking to you, obviously. I know you know this stuff like the back of your hand, but here's the idea. Think about what a family spent on phones in 1985, right? So a family's total monthly bill for a phone was probably about $15, right? You had the rotary dial phone in the kitchen that I remember well. The race to pick up the phone before it went to the before you even had answering machines. But then you look at what a family is spending today on phones, right? Hundreds of dollars a month, right? You could look at that and say that that's just inflation, but that really wouldn't be accurate, because think of what the phone does today. It's GPS. We can order food. It allows us to work on vacations without missing a beat. It allows me to do radio interviews from a lake house in the summer, right? So you can't just look at that and say, well, the price has gone up. Well, yeah, it's gone up, but look at what it does. That's one of the few good examples of why they started doing hedonic adjustments. But when you start extending that out to shirts or cars, it's ridiculous, because yes, the car has a lot of goodies, but that's not why you bought the car. You bought the car to get from point A to point B. And for all intents and purposes, despite a little less maintenance these days, a car doesn't get you from point A to point B any better. It doesn't give you time back in your life in a more effective way than it did 20 years ago, right? It still serves the same purpose. So to sit there, what you should really be doing is factoring in what durable goods like cars cost in relationship to the median income. That's the real measure, isn't it?
Well, yeah, I mean, I have to learn to just completely ignore the CPI and PC, because they're right. I know that people trade off them and they're very important, but they're meaningless. They're just models, and they're intentionally, they have huge. Where are the incentives? That Munger quote constantly comes to mind. What are the incentives? And you'll find the result. And the incentives for the government is to downplay inflation massively, because just on Social Security alone, and COLA payments and things like that. So they don't want. I think the Fed wants higher inflation because they like all the econ cultists think that that's the way out of this idiotic situation they put us in. But it's really not. I mean, anyway, lost my train of thought there, but wouldn't be the first time.
So I look at this situation now. Let's pivot a little bit, because now I don't know. These conversations are always a little bit depressing because we're going to come up with a bunch of different ideas. And
I'm quite cheerful. Let's talk about something happy.
Yeah. Well, and this is kind of what I'm saying is like looking at the positive, like thinking about the solution side. My whole thing is one of the things that can bum you out is you start thinking about solutions, and there are some, but we're at such a point in the political state in this country that the minute you come up with some things that start sounding viable, you quickly realize that, okay, there's no way in the world that that's actually going to get done or attempted. Right.
Right.
But if we were earnestly trying to deal with this, and we were not going to take the route that I'm almost positive we are taking and we will take, which is to inflate it away as if that's a costless, painless process.
It's a default. It's just a stealth, quiet default.
Right. It's a soft default. And the people at the low end of the income are the ones that take it the hardest, as always.
Of course.
Right.
Yeah.
So I often think, what would we do if they appointed a guy like you or me or both of us to run this thing? In my mind, I sit there and I go, I think that whatever you do probably needs to look like the opposite of what you've done over the last 15 years. Meaning, I think that we should start infrastructure spending programs. I think we should use those programs to put more people to work. And I think funds that have been dedicated toward bailing out financial institutions and helping them out should go to infrastructure building. I think we should break up. The other thing that we must eradicate, if the American idea is going to live on or have a resurgence, I don't think that it can unless we eliminate the term too big to fail.
Absolutely, 100%. If I was a dictator, that would be the first thing. Too big to fail and too big to jail. I mean, look at how many fines J.P. Morgan's had over the years. They've paid $40 billion in the last 10 years or so. And I mean, there was like at least 5 felonies. So you're telling me that the brick and mortar committed the felonies? The shareholders committed the felonies? No, there's individuals. But at a financial institution nowadays, Eric Holder laid out the whole thing, which, I've posted his reasoning on it. He thinks that if you put, Jamie Dimon or one of his lieutenants in jail, or even prosecute them, that would hurt financial markets. And of course, in these guys' minds, financial markets are the only thing that matters. And I think they are not the only thing that matters. I think there are things that matters more than financial markets.
Wait, where did that happen? So you've and just due to your experience and time on the earth, you've got a better purview of this. But one of the things that I think has been lost, I know has been lost, is when I look. And again, both parties to me are shells of what they once were. But the left is the most perplexing for me on several different levels. When I was a kid growing up, the left was anti-big pharma. The left was big Wall Street banks or anti-big Wall Street banks. The left
anti-war.
Anti-war. The left was, screw the rich, right? For the benefit of the poor, all that kind of stuff. Then you turn around and watch Eric Holder. And for all intents and purposes, Eric Holder is not a moderate, right? This is a pretty this is pretty fired up, mission driven leftist, and he's worried about bankers. And this to me is what people need to wake up to. Okay, there is not a party that is against big business. That is a ruse. Right. Look at Obama's administration. Look at what Holder said right there.
Yeah,
right.
Citigroup was his administration. Then Goldman was Trump 1.0.
If you're too big to fail, that should be the reason why we're breaking you up. Like if you can do that merger, but the minute you get too big to fail, we're busting you up.
100%.
We've got to start doing that. What are the chances that you think? And the funny thing to me is, you point out, the minute we start talking antitrust, it goes right to big tech, and for good reasons. That needs to certainly get addressed. You don't think that we've got? We haven't almost been bankrupted by a big tech company almost going under, right? Yeah. We have almost been bankrupted by financial institutions,
right?
We got to bust those things up, don't we?
Yeah, but we don't have the lobbyists that those guys do, right? So, again, if you want to talk monopoly, I'll recommend Matthew Stoller again. He's good on that. And there is some sunlight or some hope in that. You have found some common ground between some liberal Democrats and some conservative Republicans on antitrust. I mean, it really isn't a left-right issue as far as I'm concerned. It's about what's best for the American people. Um, and as far as the rich, I got nothing against. I mean, the rich. I don't do any rich bashing. What I'm talking about are government-created plutocrats that we have.
Yep.
I mean, John Mack at Morgan Stanley was days away from failing without government intervention. They magically became a bank, just like Goldman did, because Goldman would have gone down too. That guy shouldn't be a billionaire. Okay, people see this. I think it goes back even further. If people read my pinned tweet, I mean, who was accountable for 20 years of disaster in Afghanistan, or for the Iraq War, for that matter? I mean, remember a few years back, Bush and Cheney were Democratic Party heroes because they were talking against Trump. Um, there was no accountability for that. Who's accountable for the fact that so many of our public schools can't graduate kids that can read and write? I mean, that's a huge problem in this country. And I think like you said, infrastructure, that's infrastructure also in my mind, did that too. That's not being addressed. And I feel terrible for people that live in a city like Baltimore, or, well, most major large cities where, they have like some super small percentage of the kids that graduate can read and write. I mean, I learned to read and write by first grade, and that gives you a huge leg up. The other thing is they don't, and I brought this up before, another thing we could do is have home ec, or whatever you want to call it again, basic financial education. This is how a loan works. This is how a contract works. This is, kind of like a business law for high school kids, and teach them basic things like budgeting, contracts, that sort of thing. Because otherwise they go out there and they get hit with, 20 credit card offers when they're 18, and they, next thing, or someone says, here's 200 grand in student loan to get a gender studies major, degree. It's like, it's not fair to these kids. They're just, they're lambs amongst wolves, and predatory finance. And I mean, I'm a conservative guy, but like, if you read the book, The Big Short, I could really relate to a lot of Steve Eisman there, and it said that he'd grown up a conservative Republican, and then he realized that there was this industry called consumer finance that was basically just existed to rip poor people off. And I think, I don't think that's a good idea. I think that, people, I'm not, big on regulation in general, but if you're a taxpayer backed bank or insurance company or whatever, I guess we back hedge fund. We back hedge funds now. We did that in 2020. We're bailing them out. You should be a boring utility, and your CEO shouldn't be a billionaire. I mean, well, if you want to gamble with 50 times leverage on derivatives or something, God bless you. Just, if you fail, you fail. And people say, oh, well, we had to, or the financial system would collapse. Even people that I totally agree with, they're like, well, we had to. Well, I think, since we've proven that they will print infinite money to keep billionaires from becoming 100 millionaires, I think we could also go back to letting them fail, prosecuting them for fraud if necessary, and using this printing press to backstop whatever the fallout is from that situation. We'll backstop, your payroll. We'll backstop your bank account. It's sort of a hybrid thing that we could have done. Instead of, we throw our hands up every time and say, oh, we have to bail out the billionaires and the hedge fund guys, or the ATMs will go dark. It gets kind of old after about the fifth time. People see that. They see there's no accountability. Nobody went to jail, of course. Like one guy they threw to the wolves after 08, 09, when there was clearly fraud going on. I mean, Lehman was all about fraud. It's just, people see that and they get discouraged. And what we need to do is we need to address that. But I don't know. I don't have JP Morgan's lobbying budget, I don't know what the solution is, but I think common ground is important. Something like on antitrust with the left and right. Civil forfeiture is an example I've given over the years that left and right, I think, should agree on. This basically just stealing your stuff without due process. That's another area we could work on. I can't believe that, the Democratic Party became the party of, let's nuke Moscow. What is wrong with these? I heard worse rhetoric in 22 than I heard when, back at the height of the Cold War. Literally you had a U.S. senator talking about we could use first strike nuclear weapons against Russia. And I'm like, dude, What are you doing? You're threatening the one nation on earth that could probably vaporize us in 15 minutes. There's no there's no winnable nuclear war. And then you got Sean Penn and Sean Hannity talking on Hannity's show about how Sean Penn's saying, we're too afraid to use nuclear weapons. It's like, I'm like, what are you doing? Left and right, left went insane, right's been insane. I always knew, the right loved, the Larry Kudlows of the world love the Fed because it gives them the money that they need, the drug dealer, the high that they need to go do their wars and do their, kleptocracy building. But the left, you figured the left would be very anti-Fed because of its incredible role in wealth inequality. But I mean, frankly, most of the liberals on FinTwit are very pro-Fed, and these are some of the guys I ran into years ago and head-butted with. I mean, I'm like, dude, why? Talk about cognitive dissonance. I mean, how can you call yourself a progressive and be in favor of what the Fed did in 2008 and 9 or 2020? I mean, at some point you have to say the Fed is bad. And I have a post I'll retweet about. It's a crash course you can read in 2 articles of why the Fed is bad, and it just gives 2 people who wrote great summaries of some of the just bad stuff that the Fed is doing, and it's good for the top 10% of the population. It's very good for them. It's been good. It's been good for me and you, probably, right? So But we're not sociopaths, and I think some of these guys are. Like I said, a guy saying, "Hey, I don't care. I'm making money." And okay, but what if your neighborhood ends up dissolving into Mad Max? Idiot. Yeah, what are you doing here? There's more to life than money, And this worship of ephemeral wealth we have in the society that's a whole other topic that bothers me.
It is a whole nother, but I think it's symptomatic of the moral decay. I mean, we talk about it all the time, and I try to tell young kids this all the time, and you get the eye rolls and all that kind of stuff, but you just sit there and go, if you think that money is going to make you happy and give you purpose, A, you don't have purpose currently, and B, you're going to be sorely disappointed. It is not. It is convenient. Yeah. It's convenient. I've been broke and I've been flush. I'll take flush every time. But it is not a panacea, not even close. And like you said, that focus on ephemeral wealth, not only is it misguided, but I mean, it's ludicrous, and it's not additive to society, right? One of the things I wanted to hit real quick was people, this is much, when we do this kind of thing, I want it to be as much educational as it is, fun, enjoying the back and forth personally, but people need to realize, and I felt like you had one of the greatest look-ins to the damages and the pernicious effects of a Federal Reserve that is sanitizing every risk. And when I say this, I'm not bragging at all. It's actually the opposite. You and I are not Ivy League economists. I do not have an academic resume that looks anywhere close to these people.
Right.
And for years, I was on the radio show warning retail investors of many things. But one of the things I was talking about is the historical, horrible risk return ratio that was, or situation that was presented by bonds, fixed income, and telling people to get out of fixed income. Rates are going to go up. You're making less than the inflation on your yield, especially when you net out expenses, and you're just waiting for rates to go up and for bonds to get absolutely kicked in the teeth. Okay. One of the things that caught me off guard, and the reason it caught me off guard is I could not in my wildest dreams imagine that finance professionals were this stupid. There is no way, in my opinion, that there's nothing other than ZERP for 15 years and papering over every problem for 15 to 20 years. There's no other thing to explain how regional banks got caught being that long duration in the greatest inflation surge in history and the greatest rate hiking cycle in history. When you saw Silicon Valley Bank go down because they're too long duration, you realize that Fed policy has made these people blind. And what if you think that the Fed helping that? See, that's the problem. People don't. They want you to deal with this problem, but what they don't realize is every time you deal with this problem, you just created 3 more, right? Because they showed a picture of the risk manager at Silicon Valley Bank. Multicolored hair. Her social media post is all about end whiteness and racial equality and all that kind of stuff. And you're like, Are you a community organizer or are you a risk manager at a bank? Right. And wouldn't you know, the risk management at that bank had the professionalism and the efficacy as if a social organizer was running it. And I just don't think that those situations would happen unless you had 15 years of ZIRP and the Fed sterilizing every single risk in the market.
Oh, it was, as Jim Grant says, it was the era of ZIRP that made 5% rates dangerous. I mean, it was a ridiculous experiment. They should have normalized in 2010. It's just, and it created a host of problems, some of which we're just starting to see now. I mean, it's funny when you're talking about Silicon Valley Bank, there's two big issues there that really ticked me off. First of all, we bailed out a bunch of billionaires who had billions in uninsured deposits, and yet they didn't, but other depositors there had to wait. So they bailed out, the Peter Thiel and his buddies and Ackman and all these other guys. Listen, everybody and their mother of any sophistication knows that there's a FDIC insurance, and it's like 250 or 500,000 if you're a couple, whatever it is. Okay, it's not $9 billion or whatever. And by the way, some of the other depositors that Yellen bailed out were foreign companies, Chinese companies, these tech companies. So that ticked me off. That was, they basically said there's no FDIC limit anymore. So you don't even have to be prudent. You don't even have to check if your bank is prudent. You know what I mean? It doesn't matter the Silicon Bank is run by DEI idiots. It doesn't matter because Janet Yellen, who frankly belongs in that label too, comes in and rescues you and now has set this precedent. So everybody thinks, well, I've got 10 million. I don't, but I mean, somebody like a Thiel has, I got 100 million at this bank, but I know Janet's and her successors have my butt. The other thing is, who was a top regulator at SVB? It was Mary Daly, the head of the San Francisco Fed. Did she suffer any reprimand, any accountability? No. And they never do. None of them ever do. I mean, the few that kind of left were allowed to retire was because their insider trading during the COVID was so blatant that the Fed after 100 plus years wakes up and goes, oh, maybe the people who are the biggest example of insider traders shouldn't be insider trading. We just realized this. So it was insulting. Yeah.
Well, and to your point, we say bailout in these terms. It is amazing to me that the Silicon Valley and the regional bank blew up, and it blew up. The blow up that occurred, and that was that 2023 when SVB went down?
Yeah, I got a little thread on it. I don't know, 2022, 23. I don't know. It all blends together now.
Yeah, but the people at home need to realize that this was not some weird thing that happened that the government. What happened at those banks that were in trouble was they made a bunch of bad investments, and rather than having to eat the losses,
right,
the Fed opened up a $350 billion facility and said, don't worry, guys, you made a bunch of bad investments, but we're going to buy them back for you at the price you paid. We're courtesy of the American people. Right. You've got idiots running your balance sheet that made ridiculously bad investments. And we know that because some know nothing on the rate, not know nothing. I mean, I don't want to denigrate my own professional ability, but some no-name dude on the radio and some, ancient central banker on Twitter were telling us that this was a bad idea. Yet we did it. We did it anyway. And because you made a bad decision, the American people, I look at the American people and go, hey, when you have bad trades in your E-Trade account, does the Fed ever call you and offer to buy it back from you at the price you paid?
Exactly. I mean, it's absurd.
And then everybody wonders why these situations happen. And I'm like, guys, if nobody ever has to pay a penalty, why would it stop? Why would it stop? It's working great for them. Like you said, go look at the net worth of these guys. No matter what calamity they go through, no matter how big a lawsuit they lose to the SEC, no matter how much they pay in fines, their net worth never quits going up. I mean, what am I missing?
Nothing. I mean, I'm just as we're talking here, I'm retweeting some of these things that apply with what you're saying. I have a list of quotes from another thing about Daly is Daly was one of these other people in the Fed that were calling for higher inflation. Remember, they actually changed their paradigm, in 2020 to we want above 2% inflation and we want it for a long time. And that's a exact, Jerome Powell quote. And then and Daley was one of those people. And then they were like, oh, when it came, they were like, oh, it's transitory. And then, here we are almost 5 years later, and it's over 4 years later, and it's 3%, if you believe their numbers. So it's still, they never hit their 2%. And 2% is made up anyway. It's not, they took it from New Zealand central banker back in the 70s or something. Basically, Powell gave an explanation once for the 2% target, and it boils down to everybody's doing it. We just pluck this out of our butt, and we think we like it. And so they've never met their stable prices mandate. I mean, just look at a chart, which I can't believe they still publish from the Fred site, St. Louis Fed, of the purchasing power of the consumer dollar. And it is like just a complete collapse over 100 years, since 1913. And so they've utterly failed in that mandate. One mandate that they have been successful at is that they have found many, many jobs at banks and hedge funds for former Federal Reserve members. So that job's there's no problem there. They've accomplished that mandate. It's just like it's an ongoing thing unless something has to break. I mean, maybe Trump coming in trying to take control of Powell. I mean, or Lisa Cook, that whole thing. I mean, Lisa Cook she's another like Berkeley econ PhD. I mean, like those are dime a dozen at the Fed. We don't need any more of those. You know what? They need someone like you, or just grab a random person off the street and put them on the FOMC. And
practitioners, yeah.
Hey, if I was in 2020 sitting on the FOMC, or Judy Shelton would have done this too, and they said, you know what, inflation's too low. Let's get it higher. At least I would be raising my hand going, what are you talking about? Are you nuts? And of course, there was no one there to raise their hand and say, are you nuts? Because they're all nuts. They're all nuts. So
they're all drinking from the same chalice with the same
Lacey
Kool-Aid
Hunt says there's no diversity of opinion there. They're all groupthink. I mean, this is the diversity of opinion. I think we should cut a half, and you strongly disagree. You think we should cut a quarter. Okay, fine. That's the big disagreement there. They're all neo-Keynesians.
Yep.
Lacey said, who considers himself, I think, a classical economist. He says like there's no Austrians there. It's all the same. They're all inbred. Their colors may be different, and their hair colors may be different, and some may like boys and some like girls, but their ideology, there is no ideological diversity there. You know what I mean? So that's been true for a long time. I think post Volcker, it just got worse and worse. Greenspan is really patient zero, and it's been all downhill since. And Powell, now he's been since 22 kind of acting more responsibly, I thought, but he went batshit crazy in 2020 and 2021, I thought, and in 2019. I mean, we're doing.
Yeah. I mean, all of us were sitting there. The last two salvos they fired, we're all sitting. You and I talked about it. You're sitting there going, guys, you don't need to do that. We're swimming in liquidity as it is,
as we are now. Yeah,
they
were buying trillion. They bought over $1 trillion in MBS as the house prices were going up 20% year over year on Case-Shiller. It's a criminal. It's criminal. And then there's a great guy, Randy Woodward, who says, he's in the bank bond buying business, and there's a clip I have of him where he says, I don't know why they were buying the MBS. It makes no sense to me. He goes, I had banks. Yeah, the MBS were dropping, but I had buyers. People were buying them. He goes, in the clip, he says, I think that they were bailing somebody out. And I heard it was like somebody in Europe. And frankly, I think another thing people don't realize is how much of the Fed's operations are to save institutions in Europe and Asia, both in 2008 and probably 2022.
We've talked about that at great length. And if you have any doubt of that, you need to explain to me why prior to 08, 09, the Fed had 9 swap lines set up around the world. And at present, there are over 30, right?
A lot of billionaires to take care of. Yeah.
Yeah. Well, and think about the swap line. This is one of the other crazy things about the Fed not being audited. And I'm not saying they're doing this. It is illogical to me to go down a path where I think they're not. But here's how a swap line works. The Fed has the ability to lend against any collateral. So they can put up collateral. Fed can give them $1 trillion, $1 trillion of US dollars. And in some cases, the Fed doesn't even make them pay it back. Mm-hmm. Right. And we don't know that because you can't audit them.
Right.
Right. So, right. I mean, they could put up a pile of debt that's worthless, that is collapsing in the open markets. And I think the reason, and for people, I don't think they realize how far this illness has progressed. I think the biggest reason they're propping these places up is because they need them to buy their bonds.
Well, that may be. That may be one thing. There was a theory a couple of years ago that Besant, or no, not a couple of years ago, but when Besant first came in, that they were going to try and get a recession and crash the stock market in order to get people to buy bonds. That was another sort of theory here. I've been, Ray Dalio, who I pick on a lot because he's a Davos guy, but he has a great, little clip where he says, you've got your bonds and they're worth $1,000. He goes, but they don't have the money. He goes, so they're going to give you either $500, which would be a hard default, or they're going to give you $1,000, but it's only going to buy what $500 used to buy. You know what I mean? So it's that's the inflation. That's the stealth default. And he said this to some podcast host who I'm really not familiar with. And I looked, and the guy had like 2 million followers. And the podcast host, right after Dalio said this, he goes, "Wow, I never thought about that like that before." And Greenspan's another clip I send out. Greenspan tells Congress, this is testifying for Congress. He says, "You know what? I can guarantee you guys Social Security benefits as large as you want and for as long as you want, but I cannot guarantee their purchasing power." That was in 1995. Right. And think how much worse things have gone since. And I really think this all dates back to going off of gold. Not that gold standard is some sort of magic panacea, and I don't really know how it would work today unless we had gold at 100,000. But that was the breaks. There was kind of a break on the insanity. You couldn't get too crazy when you had to redeem your dollars in gold to the French.
It was a report card too. It was a report card.
Yeah. And now once that's gone over the last 50 years, I mean, it's like a snowball going downhill, and I still accept dollars, but I'm saying, I think the writing's on the wall. I hate to see what's coming. I mean, I came on in 2013 with Rudy Havenstein as my nom de guerre, as a warning, not as encouragement. You know what I mean? But it seems like everybody's like using that playbook, which is really sad because I have so many contemporary histories of the Weimar period and the high inflation, and it just destroys society. And it certainly laid the foundation for Hitler, who came, remember his beer push was in 1923. So at the peak of the inflation. So,
well, look, and you and I have discussed this before, but if you just want to think about it, right, this whole idea that a lack of inflation is the number one problem. Tell me how many civilizations have gone under and disappeared because their currency went up in value too much.
Exactly. Of course. Yeah.
That isn't what makes them disappear, right? Rome didn't go away because they didn't have adequate levels of inflation, right? That's not why they were clipping coins. Right. So it is embracing existential threat rather than dealing with the possibility of stubbing your toe. It is madness.
Absolutely. Druckenmiller's got a great observation. He says, we've never had a depressionary or deflationary collapse because inflation was 1% instead of 2%, or because it was 0 instead of 2%. He says we've had these collapses because of crashing asset bubbles. And the Fed, clearly in 2008, they created an asset bubble and or in the years leading up to it. And now, I mean, God, this is like 2008, 2009 on steroids, I think, or actually 2005, 2006 on steroids, right? So, yeah.
Well, boss, I have kept you longer than I promised. You have things to get to. I do as well. So thank you so much for joining us. It'd been too long, and watching all this insanity, I was like, I got to get Rudy on. We gotta.
It's just like chatting in a bar. We just kind of go on, and I like it. I can't believe you still have any viewers after having this. Will be your fourth time having me on, so you'll probably get a lot of hate mail after this. I always try and people think I'm like a Debbie Downer, but I'm really very positive on America. I think that we have a lot of course, advantages most other countries don't have, and I see a lot. The young people you see on TV are generally knuckleheads, and the ones you don't see are the ones that I see in daily life. And these are good, hardworking kids. I know a lot, and I say kids, I mean anybody younger than me. So there's a lot of good young people out there. There's a lot of good young families. I see a lot more people. I personally see people having kids, but then again, I'm in a nice area, where people are better off than most people. And but I never forget that. I play poker sometimes with guys that have trouble coming up with $20. Mm-hmm. So I can understand the plight or the troubles that poor people grow up in, and I grew up in as a middle class. I mean, we weren't poor, we didn't go hungry, but we didn't have any money, and my didn't. I never took any pennies from my parents. But I'm just saying, I think that there's a lot of good out there, a lot of good people, and we tend to focus on the bad, because that's what gets in the news and that's the clickbait. But there's a lot of good people out there, and I hope that some of them will rise and be our leaders of tomorrow and do the right thing. And care more about Americans than the top 0.1% or about the top 1% in other countries, frankly.
100%.
Thank you very much. It's always a pleasure.
We'll have to do it again and not let as much time pass in between. So in the meantime, thank you for coming on. God bless you and yours. Take it easy. Too. Stay out of the purview of the CNBC haters. And we will talk to you again soon. And I hope you guys enjoyed this as much as I did having him on. Again, you can find him on Twitter at Rudy Havenstein. If you're on financial Twitter, you had to have run across him at some point.
You'd probably block me by now. That's for sure. I don't blame you.
Well, I repost and promote, so that kind of tells you what side of the aisle I'm sitting on here.
Well, I always liked you because I got to go back to listen to you years ago, and then you were very prescient on the Boeing thing in particular, but among other things. Yeah, you're the guy I've talked to the most. I think our first one was November of 23. I looked up. So.
Was that the first time? Okay,
I think so. And then I got February of 24, and then you and me and Dimitri Kofinas had a chat back in March, and now this one. And if anybody, send the hate mail to me and not to Zach. Everybody. So, I also have a.
We got to get you one of those dinners that Dimitri puts on. You would.
Yeah, never say never. I'm kind of shy, but I have a Substack. It was pay, and I had a bunch, but I decided to my main purpose here, other than to amuse me, is to educate people. So it's free now. It's all free, all the posts, and there's a ton of stuff in there. Really, I write prolifically, for good or bad. Rudy.substack.com.
Yeah, and if you guys, for those of you that want to better understand what we're talking about in the Fed, I think there are very few voices that do as good a job of breaking it down into bite-sized things, where people can actually not come and regurgitate a bunch of things they heard on CNBC, but actually understand it. So kudos to you for doing that, man. Keep it up. We need more of those voices out there. And
thank you.
In the meantime, the rest of you have a wonderful day. Thank you for joining us. We'll be back again next week with another interview up on Slate, and we'll see you then. In the meantime, have a wonderful week. You're listening to Know Your Risk Podcast. Download and subscribe at knowyourriskpodcast.com.
Investment advice cannot be given without a client service agreement. Zach Abraham is an investment advisor representative of Trek Financial, an SEC registered investment advisor. Bulwark Capital Management is a marketing name only and does not carry a separate registration.